Life is grand, life is great, life is good, life is beautiful. You gotta give it all you got, everything you got to give. Time to shine, time to live. Life is grand, life is great, life is good, life is beautiful. Now you're living out your dream with your hopes up high. You're only living in the sky.
Hey, good morning, everybody. How are you doing? ¿Cómo allez-vous? Hey, it's Tuesday, the 1st of August. Good job. Survived another month. Vista! Go on. So, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I can't get over to that slide. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. I appreciate you. You make me want to be a better trader. So I have to stay sharp, stay focused, so I can help you become the best trader you possibly can be. Why would I want to do that? Well, TradersWay.com wants to be your prime broker. The reason for that is every time you pull the trigger, they earn a little bit of money. So what they want you to do is be a successful trader that trades year after 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 year. If we're in this, what a broker needs to do is just simply execute your trade quickly, affordably, no drama, mama. Don't be a drama llama. Do you know this one? It's the psychedelic llama. I don't know. Snail. Nah, yeah, there's a whole bunch of llamas. I'll have to ask my kids. Upside down llama. Anyways, yeah, so there's two business models. A lot of brokers, in fact, many brokers, they feel that if you pop in $1,000 into a trading account, you're going to just lose the $1,000. They're going to keep it all. Then you just go away. What we want you to do is trade successfully for years and years and years and slowly grow your lot size because your account size is growing. And that's why I'm here. I'm trying to get you to that point where you can trade independently, successfully for many years to come because you're patient, you're disciplined, you're skilled, and you have, right? And you are a true market participant. Not an observer, not a speculator, not a spectator. Yeah. Hey, Joe. So, I don't know. I've been doing this a very long time, and I want to see you succeed. So I'm here every day, 7:30 a.m. New York time, approximately London lunch. Questions are encouraged. We'll go through the charts, go through the fundies, whatever you need. I'm happy to help. And then, of course, I like to remind you every day that life is great, life is grand, life is good, life is beautiful. You're going to get what you give. How does it go? Get what you give, better give it all you got, something like that. All right, so let's see. What do we got here? You got charts, you see colors. All right, we're good now. I got a different setup with my monitors. And it's not that good, so I'm going to have to monkey around some more. So what do you think of the new pivots? All right. So we have a new high forming. This is a cluster up here of a weekly projected top, monthly sell pivot. Remember, it doesn't mean the market's going to sell. I want to make sure you understand the definition. This is not a reason to sell. It's a pivot that says if you were already had a reason to sell, if you already had a bias, this right here is the price that you should start looking to do said sell. Come on, Bubba. Come on, Bubba. There we go. I'm not a smart man, but I know what monthly M3 is. There we go. So anyways, that's the idea. If you happen to already be bearish, you trip down the bearish stairs, and you got into this M3, you'd say, oh, I wonder if there's any other resistance. Oh, look at that. It's 118.5 and the projected weekly high. Maybe I should start looking for reversal patterns. Okay? You can see this wedge, right? This rising or ascending wedge. It did its thing. Cool. So they're still, technically, still bullish. But you can, if you were a bear already, remember there's nothing on this chart that says you should be a bear. Nothing. It's all bullish. But if you were a bear, what if you saw like a double top and a drop? Yeah. Well, okay, let me comment here. Joe says the Stokes are working like a charm these weeks in the Euro USD. Whoa, 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 whoa. It's not the Stokes. You got to be careful. I know what you're saying, but your language is important because even though you didn't say it, you typed it. You're using your brain in multiple ways to communicate your message. And even if you didn't quite mean it the way you typed it, your brain is listening. Your brain read it as you typed it. You thought about it as you typed it, and all this kind of stuff. So let's be careful. Stokes had nothing to do with it. The stochastics measures the candles relative to the previous candles. Okay, that's all it's doing. Did this make a lower low relative to these? Yes. Did this make a lower low relative to these? Yes. Oh, look, it's crossed down. This one make a low relative to these? Yes, down. Did this one make a lower low relative to these? Yes. Did this one make a lower low relative to these? Yes. Did this one make a lower low relative to these? No. Did this one make a lower low relative to these? No. See, it's crossing up. It's not the Stokes, it's the other way around. No, I know, but you got to be careful. Because you'll start listening to yourself, and you got to be careful. Okay? So fine. Okay? Stokes is simply measuring the price action. The price action is already predictable based on other things. Okay? So if you did the like a 3A2 on this, okay, you can see that in here you're measuring the weakness in the down move, but you already know technically it's an up move. You're already at a 382. You're already at the weekly central. And the 382 predicts a 1618, which is right here. But Stokes doesn't predict any of that because it's hindsight. The pivot and the fib are leading indicators. The oscillator is lagging. Okay? So the Stokes didn't do anything except follow everything else. So you got, right? So the Stokes didn't work like a charm. The Stokes is going to follow whatever price is doing. Yeah. So it's more of a level of confirmation. Okay. Yeah. Oh, yeah. I know you know, but we got to be careful. Yeah, hey, no worries, man. Yeah, humans and language, we're a very interesting creature, right? We're very interesting creatures with language, both written and verbal and such, and our brain is very in tune to it. So we got to be very careful in the ways that we communicate to ourselves and to others. All right. Yeah. Okay, how are we doing so far? Oil still going up. Luftletulimum. We were eyeballing this on the for the kitty cat, right? So we're hoping this gets up to what, 51, 51 and a half, maybe 52. 52 sounds like a stretch. 51 sounds more achievable, doesn't it? Anything else going in the fib world or pivot world? Not monthly, not weekly. We got this little problem here at the psychological level. Okay. Right? Funny thing about this, it goes back, so these pivots are new. So this projection and stuff is just simply the top of the range. Oh yeah, sure, Justin. Yeah. The problem with dailies is I'm not putting you into a trade right this second. So we're going over slightly higher level ideas of like what's happened, where are we likely to go, where are the next levels of support and resistance, that kind of thing. Then you can extrapolate that down as you filter in. And you can find clusters and work your way into a trade where you pick up your 25 pips or something, right? Yeah. Oh yeah, no worries, man. I'm gonna get rid of this. There you go. Life is beautiful. Oh. Okay, so we'll go CAD then. This really got convoluted on us, didn't it? So I would be really concerned. So I think you can see some of my markups here, but let me put it something that probably is easier to see in the webinar. La 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 la. Oh, here it is. La 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 la. Okay, you can see that, right? And then I think you can see like I got you scumbag. No. Hang on. Everything. All right, let's try this again. Okay. So we'll see what happens in here as we approach an apex. They're basic calculations, Sean. So the central pivot is the high low divided by 3, simple math. Other pivots rely on the high, other pivots rely on the low, but it's price action calculations. Okay? What I call support and resistance of the market depends on what the market did in the last time frame. So daily pivots look at what happened yesterday. Weekly pivots look at what happened last week. Monthly pivots look at what happened last month, so on and so forth. So based on what happened in the recent past, try to make some basic calculations. So for example, if USD CAD goes up, the projected high for this week based on what happened last week is up here. The red zone is the projected high for the week. The green zone is the projected low for the week. And the reason I chose those colors is the low predicts no more down, which means maybe up. The red means no more up, so maybe down. And red to me means down, and green up. Okay, now you may laugh, and you may believe this, maybe you don't. But these are on standard pivots now. You'd probably find them all different versions on the internet. When I first started trading, there were no pivot points. Then I had somebody calculate, or actually program for the GFT deal book, and what was it, CTL or something? Pivot points. And I was asked, where are my zones? Okay? And even at the time, people didn't even use midpoints. Even if they had pivots, they didn't use midpoints. So I after observation and stuff, I called these pivot profit zones, the M1 to S2, for example. And then I pondered and stuff for hours or days or weeks. And anyways, I was asked what colors they should be. If I want, because I said, well, this is my zone, and I want to make it easy to see. So I came up with these colors, which really is strange to put green on the bottom and red at the top. This just doesn't make a lot of sense. But it did to me based on what thought. Then I had it programmed. Then I started training at GFT stuff, but even at the FXCM Forex Expo in Vegas in like 2007, I started teaching it there. And FXCM didn't have pivots, and people freaked out because I did such great training on using pivots and how important they were, so on and so forth. So what I'm trying to get to, and then GFT had so many people signing up asking for the pivots that they came to me one day with the Dealbook 360, and they're like, we need your pivot point indicator. And I gave it to them. So I know this is a stretch and you're not going to believe it. These colors that you find all over the world now on pivots, I honestly believe that they're mine. I created these colors. I was there when it happened, honestly. Now, it's not the Wayne McDonald thing, it's not the FX Bootcamp thing, but I remember how it went down. Yeah. I was there when it went down. I don't remember anybody talking about pivot points. Except that guy out of Canada. What the hell was his name? Mr. Bumbling guy. What the hell was his name? I can't even remember. There was some dude in Canada pitching it and selling it. Some stupid course. All right. Oh, yeah, but one of those things like, hey, how do you calculate a pivot point? He wouldn't even tell you that. He had to sign up for his monthly service, and he would tell you the market pivotal points. What? Yeah. And you had this funny thing, too, where pivot points are like flying an airplane. And if you've been trading all day and losing money, we'll just turn it upside down and just do the opposite. You're like, what? So your pivots tell me up, so I should be buying, but if that loses a lot of money, I should just start selling instead? You're like, what are you talking about? Yeah. Oh, yeah. That's my advice to you. If whatever you're doing is losing money, just do the opposite and you'll be great. That's how you become a bajillionaire. Like, wow, really? All right. So is it wake up time yet on the peso? Yeah, that's some winning advice. What do you think? Is it waking up yet? Remember, we don't know. But today is plausible, isn't it? But not necessarily tomorrow, because tomorrow's not payday. Not necessarily Thursday, because Thursday's not payday. Maybe Friday, because Friday could be payday. You also have NFP, which could create dollar weakness. Because whatever. So this is a tough month, and we talked about it yesterday. This is not an easy one because the spread between the first and the first Friday, right? Both are paydays. The spread so far where you might get sort of a little dip and then a fade and then a little dip and then maybe whatever NFP helps or hinders, we don't know. Yeah, well, Ryan says Friday makes sense, first Friday. Yeah, but NFP might mess this whole thing up, right? So that's why you got to be careful. Because let's put it this way. I predict the downward move in this pair, if any, or let's say an appreciation in Mexican peso, is to the tune of $2.2 billion. NFP has got chunks of corn bigger than that, right? Yeah. One dude could put 2.2 bill on it. So, but, and that's a big but, if it gives us dollar weakness anyways, pachow, it's dollar weakness plus 2.2 billion moving to Mexico. Okay? But is the 2.2 all going to happen at the same time? So a little bit today, a little bit Friday, a little bit Monday. It could be a total sleeper, but work out. Okay? And then if you go back in time, you might find, how about this? This is sort of the first of the month, and then that's the Friday. So, yeah, but now it'd be like even further back. So what I'm saying is this could go up to M3 and then drop on Friday. We don't know. Okay? Yeah, well, you need to be able to qualify. How good is this opportunity? It's the same opportunity as last month, the month before, 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 the month before. Now, each month in more recent history, the amount of flowing back, the amount of dollars being repatriated back to Mexico in the form of peso has grown. Well, if you go further back, like I've been doing this trade for a decade, it used to be, I can't even remember now, over 3 billion. Maybe significantly more, I can't even remember now. And then it shrunk all the way down to like 1.5 billion. And now it's been growing back now to 2.5, maybe sometime soon 2.5. And it's growing, right? And as the economy improves, it could grow back over 3. Maybe it's 4, maybe it's 5. I can't even remember what it used to be. I used to remember, but now I don't remember. All right, so anyway, so there's that kind of stuff. But also, when qualifying the opportunity, because fundamentally it's all the same, we also want to pay attention to when the days drop on the calendar. What day of the week is the 1st. See, like for example, if Sunday was the 1st, it could be interesting, right? Because some people still might be paid Friday, but a lot of people are going to be paid on Monday, which means move could be Monday and Tuesday. But if it's on Tuesday, then people were paid on Friday, but a lot of people won't be paid until that next Friday. And so I don't know. Just you got to pay attention. Some are better than others based on when you actually get to Western Union and wire the money out. Okay. So we're sort of in this area here. It kind of looks like it's heading down. It kicked off the monthly central. I like that. That's the sell zone, right? Remember, this is our sell zone. So it could be the beginning. Yeah, could be. It might not be. But it could. Totally looks like it might. Probably will be, but it might not be. Look, it's totally falling, but it could go up one more time before it heads down. Okay. That's gorgeous, isn't it? Trade it, please. Look at that. That's gorgeous, huh? Yeah. Oh, you like that? All right. All righty then. You like pineapples? All right. Let's flip a coin. All right. If you were heading up, this is the opportunity to buy. Okay. What's the justification? $21 EMA. That's it. There's nothing else to that. Strategically speaking. Okay, that's it. The 21's a dynamic level of support and resistance. So if you're a bull and price is above 21, you buy at the 21. That's it. That's how you trade. That's how you trade moving averages. Okay. So you say, well, look at that. So I'm on the hourly 21, and maybe you start looking for 5-minute entries now. Okay. And you already know the reason you're buying here. First of all, it is support. Second of all, it's the hourly 21. So it's not supposed to go any lower. Sean. What are they going to do, Garrett? Is it the best? Let me answer that. The moving average, set at whatever setting you want, or whatever color you want, simply measures the average price over the number of periods that you have to calculate. And if it's weighted, it pays more attention to the recent than the past. Is that which one's best? Well, they're all perfect. Okay? Look, now I'm going to measure 22 periods exponentially. And it does it perfectly. So I just changed it now. Now I'm using the 22. Is the 22 better than the 21? No, it's just as good. All right. It's perfect. Okay? So what we want to do, and again, I'm messing with your mind here. These algorithms, these little programs that we have to do things like calculate and then plot colors for us, they do it perfectly every time. So really, what's best is, what does it mean to you? Because there's no best. Okay? What combination of tools will get you to believe this is going up, down, or sideways? So I used to use the 20 and 60 EMAs to do the same thing that I'm using the 2155. Which one's best? Doesn't matter. Not at all. So then what is the purpose? No, it doesn't, Sean, because you're the master of the universe. Okay? So again, I think, because a lot of people teach this too. They're like, well, if we all use the same thing, then it'll be a self-fulfilling prophecy. That just tells me that you're not in control. Whoever said that, once again, doesn't know what they're talking about. Hope is a big part of their strategy. Well, if we all just use the same thing, we'll all do the same thing, and then we'll all make money together. Buy my DVD. So what I'd rather you do is whatever tools you want. Instead of the 200 EMA, oops, let's make it a 233 EMA. Doesn't change anything for me. Crazy here. 888. Whoa! Okay? Looks important to me. Right? Look, what these algorithms do, what their purpose is to help you do your analysis and make a decision. Who cares what everyone else is doing and using? Is this going up or is this going down in the recent past? Sean? Come on, man, I'm on your side. I'm not picking on you. No, it's all right, guys. I'm waiting for Sean. Sean Garrett. There we go. Yeah. That's a very, very important step. In your opinion, this is going up. I don't know what made you have that opinion. Nor at the end of the day does it really even matter. But that process of using these tools to do analysis and make an opinion, okay, is the first step to your success, not what everybody else is doing. Who cares? 95% of traders lose money, so who cares what they do? Think about it. 95% of people are stupid. Using the same tools as stupid people probably just makes you a mediocre city if you're actually smart. And I think you're probably smart. which means you're not capable of being stupid. If you try to be stupid, other people are going to be better at being stupid than you. And your stupidity will be mediocre. Okay, I move over to this. Okay, so here's a basic setup. We're on an hourly chart. Maybe you want 4 hour. That's fine too. Hang on. So I feel like the PCs for some reason. Turn that off. All right. All right. So the first step to success is making the decision. So now we're looking at a 4 hour chart. Has your bias changed? Or is this down? Yeah, this is, maybe I gotta restart this or something. Yeah, are we back? It's just, the webinar just totally came to a crawl. Now let me share again. Yeah, it's super slow. All right, so anyways, let's go back to this. What's important is that you use these tools to make decisions, not trying to figure out what other people are doing, not trying to figure out what might happen next. I mean, this is all about opinion. Right? So you look at this. Oh, Wayne, Mike asked a good question. Let's go back then. Wouldn't you say moving average trading is kind of hindsight? Oh, of course, but that's fine. I don't mind that. Okay? There's a purpose to all of that as well. Okay? And also, moving averages, you're kind of shooting in front of a moving target as well. So a lot of it is anticipating where the moving average is going to be soon. But also, and I don't know if you figured this out, but much of the reason my setup works is because if you're looking at a 15-minute chart, you're actually anticipating what's going to happen on a 1 hour or a 4 hour. There's actually a beauty in the math. There's a harmony in this math and how all these things work. So if all you're looking at is a 15-minute chart, sometimes it'll work for you, sometimes it won't. But if you're using a 15-minute chart in conjunction with a 1 hour or a 4 hour, you'll start to see that the 200 on one is a 20 on the other. And you'll start to say, oh, so the 15-minute chart works because of what I see on the 4 hour. But the 4 hour sold, and you're like, oh, it's a timing thing between time frames. And then you'll have this like breakthrough. Okay? And so that it's okay that it's lagging in a way, attention to the multiple frames. It's actually not lagging. In some cases, it's almost leading because you're leading the 4 hour by using the 15. So all you use is the 15, then it's going to be lagging. If you're using the lagging front run 4, then it's leading. Okay? So if you're in the training course, it's under that's Forex Trading Strategies, where we break down fractal geometry and chaos theory, and how price action comes together. And then, of course, there's a whole series of, 8 videos on price action. So you kind of have to use. So getting back to this, what you want to do is look at this chart. Use whatever you need. You don't like MACD? Use stochastics. You don't like stochastics? Use ADX. You don't like ADX? Use CCI. None of that's relevant. What's relevant is one of these things work for you. Let's say MACD, Stokes, ADX, CCI. Pick one that you like. Pick one that seems to catch your eye. Pick one that you trust, or just flip a coin. Pick one, and they'll always perfectly tell you what they're designed, what they're programmed to tell you, right? And what you want is something that says, "Hey, this is up." So, for example, my MACD tells me something specific. It tells me the angle of separation at the 21 and 55. This tells me the 21 is above the 55. And the 21 is pulling away from the 55. See? 21's above the 55, and the 21's pulling away from the 55. That's what this tells me. Most people don't know what their indicators tell them, so they have no idea what they're doing. Okay? And then the oscillator just tells you levels relative to the others. So this tells me the last few candles have been making higher highs. Okay? And if this crosses down, not only are they not making new higher highs, they're starting to make lower lows. This tells me lower low, lower low, lower low, lower low, lower low, not lower low, not lower low, higher high, higher high, higher high, higher high, higher high, higher high, not higher high, higher high, higher high, higher high. Okay, I don't even need to look at the candles. All the information's there. There is to help you discern whether you're a bull or a bear. When you get that, I'm telling you. So this goes back to who was it? Sean, right? Right? Sean. This goes back to Sean. All of this information is simply to help you decide whether you're a bull or a bear. And when you get that right, you'll always be ahead of the curve, and you'll make a decent amount of money when the rest is figured you out, not the other way around. Okay. Now, I'd like to add one more level here of complexity. Wow. Yeah, something's totally slowing what we see down now. I'm going to add weekly pivots. Now, the weekly pivots don't tell me to buy or sell. Pivots tell me support and resistance of the market. One way of looking at it is this red zone is where you should stop buying. Okay. Okay. This tells me this is a buy zone. This tells me it's a buy zone. Okay. So I know my buy and sell zones. I also have made a decision based on averages, whether I should be a buyer or a seller. It tells me I should be a buyer down here. I should take profit up here. Two totally different pieces of information. I should be a buyer here. I should be a buyer here. I should be a buyer here. I should take profit here. I should take profit here. I don't give a damn what anybody else is doing. Because they're not very good. Okay? So, Sean, I want you to think about what works better. Nothing works better. Manipulate your charts. Use any indicator you want, any combination of indicators. You could use 100 indicators if you want. You could use no indicators if you want. The most important thing is you look at your chart and you decide whether you're a bull or a bear. The rest should just be price action, really. You could use basically no indicators whatsoever. Just use price action based on your opinion. And don't be one of these guys that like buys, sells, buy, sell, sell, buy, sell, buy, sell, buy. Just don't do that. Be the person that makes a decision. I'm a buyer. I'll buy at this level, or this level. Done. You'll do so much better, Sean. Flip a coin. Let's say you're a bear now. And you have to be a bear for at least 3 months before you're allowed to flip the coin again. So now if you're a bear, you would sell at this level, or this level for various bearish reasons like resistance here, resistance here, resistance here. Okay, Sean? No indicators whatsoever, maybe. Just old price action. And if the market agrees with you because you're a genius, you'll get entries and you'll get paid because it'll flow down, right? If the market's up and disagrees with you, you probably won't get very many trades, or if you do, you'll lose, but you won't lose a lot of money because you won't get very good entries. Okay? Generally, you want to be a bear in a bearish market. Generally, you want to be a bull in a bullish market. So I'm hesitant to change my charts too much. I don't know what's dragging anything down. There's something sucking my processor power. I don't know what it is. Let me know if we got a number yet. Yeah, the number should have come out, but I don't want to touch anything on my PC to slow it down. Gold is behaving like it got a good, a number, pointing at weakness. Unchanged, thank you. Okay, look at this. Look at this sell right here off of it. If you're a bear, that roll reversal with the pivot at 110.50 is very tradable. So guys, this data, there's more to it than PCE. What else came out? Personal savings, personal income. All of this data goes into GDP. So if you're trying to model GDP, this data would go in your model. Well, technically, it's not investment, it's spending. Businesses invest, consumers spend. Yeah. But you can actually break it down. If you download a GDP spreadsheet, it tells you how much people are putting in their bank account and how much they're spending. You could also look at how much credit. I can't remember if credit is in GDP. I think it gets accounted for in a different way, but these things are important. How much money are you making? How much money are you saving? How much money are you spending? How much money are you borrowing? Because all these things. So like I'm putting in an infinity pool. Okay, great. Good for the McDonald family. Great. That's not the point. The point is how many people are going to get employed by this. Lots and lots and lots of people are going to be employed. From the guy that drives a tractor around to the guy that manages the whole project and hires the subcontractors, the subcontractor bosses, to the guys that deliver the rebar, to the guys that cut the rebar, to the guys that twist the rebar, the guys that drive the cement truck, the guy that owns the cement company, the guy that has the technology to turn it into shotcrete, the people that do the tile work, the slab people are different from the shotcrete people. Then there's the hardscaping and the landscapers and the electricians and the plumber guys and the guys that make the pool pump supplies and just gee whiz, right? There's a lot of people that go into something as simple as that. So it's important if I'm spending money out of my bank account or if I'm borrowing money from the credit market to put that in, one way or the other, it impacts a lot of people. Now, all of those people have jobs, and now they can pay their rent, but they can also buy groceries. Maybe if it's been a good month, or if they've overcharged me, then you go out and, you borrow more money to get nicer furniture, or you go to Sam's Club and you buy a big giant TV on sale or whatever, and you start spending that. And then those guys have jobs, and then those shipping company guys. All of a sudden, it's really, really happening. And of course, all of that eventually goes into a bank. 20% gets put at the Fed, 80% gets put back into the economy through loans. Or actually 10% at the Fed and 90% back in loans, sorry. So what we earn dictates how much maybe disposable income we have, and then that should. So like when the economy is really good in the United States, you'll find out that there's actually a negative bank account balance. So like nobody has money in the bank, and people are putting stuff on their credit cards, and the economy is booming because all cash available and more than cash available is reinvested, if you want to call it like that. Les Ryan says, invested back into the economy. There's all capitals completely deployed. That's amazing if you think about it, right? Yeah. It's amazing if you think about it. And then you look at a country like South Africa, which should be filthy, stinking rich, but it's not. It should be, but it's not. And it's frustrating to me. It's probably even more frustrating to a South African. But it's less efficient at deploying capital. Yeah, we are a hardy bunch. Good people. South Africans are good people. There's no doubt about it. Like Venezuela. No, not yet. Maybe should be. I don't know. I'm telling you, South Africa should be a very, very wealthy country. All right, so what's going on? Okay, we'll just zoom over. Yeah, politicians are really letting people down, not just in South Africa, but everywhere. So let's do one more, and then because of the webinar problem, actually time of day and stuff, I'll do one more, and then we'll call it a day. We'll regroup tomorrow. Sorry. All right. So where is wheat? So I noticed yesterday we made a 618 Fibonacci retracement, which makes me think maybe this goes up. Okay. 618 predicts a 1382. I see a 1382 is a monthly pivot, but that didn't exist yesterday. What did exist is the pivot profit zone. And pivots tell me that if you are a buyer in this area, then the target's going to be here. Okay? The other line says if I buy off the 618, then the target is the 382. See how they're kind of the same thing? So I took the shot, and I'm up 100 pips so far. Some point I'll have to move my stop to break even. I might do that, maybe. But I got it under an M2, weekly M2, monthly M2. So monthly M4 is actually up here if I wanted to stay in for the rest of the month. So the conservative low is where I bought. The conservative high is at 148. And I'm in at what, 145? So 300 pip potential, which on the pound yen is sort of embarrassing as it's so small. They're like, really? You had a long pound yen and only made 300 pips? Oh my God. It must feel awful. But it's a start. Now, here's the interesting thing, isn't it? On a macro level, this is a 382. What are you talking about? So the 382 predicts so I might stay into 153. So I might get lucky, more like somewhere between 600 and 900 pips. But being time of year and all that, you'd be surprised. Let me try to fit this in. So let me get rid of this one now. Come on, Baba. Okay, so there's that one. All these words I don't just say. So I might even go to 160. That's what I'm really thinking. Right in here. So I'm thinking if I can stay in this, if I can stay in this till December, I might be able to ride it for 1,500 pips. Or I lose 50 or 60. Yeah. So if I lost 50 pips, is it going to really impact my trading record? Are people going to stare at that, go, damn, boy, did you just lose 50 pips on that pound yen? Completely invisible, right? Do you think you'll notice a 1,500 pip trade? Yeah, I think you probably would. So that's what I'm doing. I'm risking virtually nothing, and I'm going for virtually everything. And I'm going to multiply that probably 20 times. That's what I'm thinking. Now, I'm fully prepared to be early on this. I might be early. Okay? Yeah, well, that could work for me. Hey, Johnny? But it might work against me, right? It's the start, right? Yeah, that is the start of building a portfolio. Well, you know I'm going to start in the next 3 weeks. Right? You know I'm going to do it. You don't know when I'm going to do it, nor do I. That's the thing. Like, you know I'm going to do it. I know I'm going to do it. You don't know when I'm going to do it. I don't know when I'm going to do it. But my goal is at the end of the year, I'll wake up and I'll say, damn, I'm glad I did that. And what's happened in years past, people kick their chair and they're like, damn, I knew he was going to do it, and he did it, and I wanted to do it. I'll do it next year. Right? So I don't know. I don't know. I will probably lose money on this one. Because I know I'm early. But you got to take the shot. right? Didn't Michael Jordan say, he has a quote on something like this, right? That he missed about 70% of his shots over the career. And nobody thinks, what a loser that Michael Jordan was. He only made 3 out of 7 shots. He did get the important ones, which means he was prepared mentally and set up and prepared, and you know what I mean? He didn't sit there thinking, well, I'm good enough, I'm smart enough, and gosh darn it, people like me. Right? No, he practiced. I teach my kids, you win by practicing. Right? You win by practicing. You go to the tournament simply to show off your greatness to everybody, to be an inspiration for all those around you, and to pick up the trophy. And if you're not at that level, it probably ain't going to happen, because someone else is going to be like that. Right? It's not a tournament, it's an exhibition. Yeah. So anyways, hey, I got to run, guys. Why don't we gather tomorrow? And thank you for all the good questions. I hope I don't rub you the wrong way. I rub some people the wrong way. I know that. But I hope, even if I deliver a message that irks you, I hope you realize that it is sound advice. Right, Sean? Who's my buddy Sean? Sean Sturt? Shawnarama? Sean. There he is. Oh, good. So I hope to see you tomorrow, Sean. We got to give Sean a prop, man. He was the whipping boy today. That's how you learn, anyways. You get involved. Participation. All right, see you tomorrow. Thank you for being a client of Traders Way. Everybody here needs to register at tradersway.com, or you're simply a lurker. And nobody wants that. We want you to join the family. Sean signed up last week. Thank you very much, Sean. Welcome to the family. Cheers, guys.